Welcome to the Transparent FX Academy. In this video, I'll speak about USDCAD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is at a very strong support and demand area. In fact, what we can notice is that the level that the market is currently rejecting to the upside is a higher zone area. From here, in multiple occasions, we have seen very strong institutional buying, and we can see how every time the market created higher lows at this area. We will be speaking in more details about the institutional buying going on at this level in just a few moments when we move to the commitment of traders analysis to see what institutions are doing. But for now, let's keep in mind that we are at a higher load zone. We have a trend line which has already held the market in multiple occasions, which just got tested once more, and the market is already in the process of rejecting it to the upside. So in a situation like this, more bullish price action could be expected away from this area, as already happened in the past. So let's keep this in mind and drop down on the weekly time frame. Now, from a weekly perspective, this is where things really start to get very interesting. What we can notice is that the market first was in a very clear downtrend. The market was creating this series of weekly lower lows and lower highs every time the market was pushing lower, creating new lows, and at that point new sellers stepped in at every corrections, creating new lower highs. However, what changed was exactly here when the market for 3 consecutive times failed in creating new lower lows. The first one was here, the second one was here, the third one was here. Now, this is a triple bottom scenario, and usually when you see such pattern, it means that already sellers have not managed to bring the price lower, and after the triple bottom, what you expect is an inversion of trend. So you essentially expect the market to shift from the creation of lower lows and lower highs to the creation of higher highs and higher lows. So you expect a break of structure to the upside. Now, if we have to identify the structure here in this price action that we can see here from a weekly perspective, it is very clear that the area of structure is right here. This was the zone that was acting as previous support, preceding all this rejection to the upside. Then the market broke the level to the downside, and at that point, that previous support was turned resistance here and here and here. Then the market broke back above the zone, and again, as we know, previous resistance, once it is broken to the upside, becomes support. And the market is now respecting this area again as support here. And right now, with the most recent test and start of this rejection to the upside. So in a situation like this, there is very good probability of seeing bullish price action being printed away from this area, and for the market to really shift from lower lows and lower highs to higher highs and higher lows. So from a bearish trend to a bullish trend, with the triple bottom here being the inversion pattern for this market. So the situation at the moment is very clear. Let's keep all of this in mind and drop down on the daily time frame. Now, from a daily perspective, I spoke about USDCAD just a few days ago after the market created this overextended M pattern. I spoke about it when the market was here and explained all the reasons for which I was expecting this rejection to the upside, which is in fact exactly what the market just did. And by the way, I will link in the description that previous analysis so you can go and check it out for more free education. But at the moment what kind of structure we have here on the daily. Well, before we dig deeper into what we have here from a technical perspective, first let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing on the CAD. Well, if we look here at the data, the first thing that is very clear and very easy to identify is that net positions got decreased massively. We went from a situation where we had minus 70k net positions. So essentially, institutions had 93,000 shorts compared to 23,000 longs, to now having minus 108,000 net positions. This means that institutions have been shorting the CAD aggressively, going from the 93k that we had here all the way up to having now 125,000 shorts on the CAD. At the same time, longs are getting decreased on the CAD, going from 23k down to 16k. Now you have to keep in mind that all currencies on the spot are traded against the USD. So if we are looking at the data for the CAD, what we're actually looking at is CAD USD. But since we want informations on USD CAD, we simply have to reverse everything. So if institutions are shorting CAD USD, they are longing USD CAD, obviously. And that is exactly what is going on, as we have just seen. Institutions are shorting CAD USD, so they are longing USD CAD. So let's keep in mind that institutions are longing USD CAD by shorting the CAD, and let's move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, what do we have here on the daily time frame? Well, the most important zone that we have to keep in mind here is this area here, which is quite important structure. It was acting as previous resistance here, preceding this rejection to the downside. Then the market broke it to the upside, and again, previous resistance becomes support, and that is exactly what happened here. Then the market broke back below the level, and right now the market is trying breaking above the zone. Now, until the market will remain below this area, it can easily be rejected to the downside. However, if we get a break above this zone, that is where things get interesting, because a break above this area would make this previous resistance again become support. And if we do get this break above on the retest of the previous resistance turn support, since institutions are already longing USD CAD, as we have just seen, in my opinion, there is good probability to see even more institutional buying, increasing the probabilities of a potential rejection to the upside. So if we do see this break and retest, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this area for the market to complete this daily impulse correction and impulse pattern to the upside, fueled by strong institutional buying. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially, every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates, and I will see you in my next video.